Have you ever wondered how you can make money and make positive changes in the world? Maybe you've heard of a really cool progressive idea or concept and thought to yourself, I would totally put my money where my mouth is. Or perhaps you've heard of investing terms like gamma, iron condor, and charting patterns, and well, they just make your head spin. Instead, you'd rather just follow your moral compass when trying to choose your investments. If any of those ring true for you, then environmental, social, and corporate governance, otherwise known as ESG investing, may be a perfect fit for you. Stay tuned to learn more about this fascinating form of investing. ESG investing has been around since the beginning of markets. In its essence, it's people choosing to invest in companies and endeavors that they believe will bring about good works for everyone. As a name type of investment strategy, it came about in the 1960s for those investors that wanted to be socially responsible in where they were putting their money. Broadly speaking, an investor might exclude certain stocks or even industries that they don't believe are good for the world. A couple of common examples are tobacco and oil companies. On the flip side, maybe you as an investor want to encourage companies that are developing, say, clean energy or new healthcare techniques. The thought is that by limiting capital to certain industries, their footprints will shrink, and that by providing cheaper capital to other industries, they'll be able to supercharge their growth to get their technology into the world faster. Let's talk for a minute about each of the three main aspects of ESG investing. First, environmental. It's just how it sounds. Investing in this segment is because you have a passion around maintaining and improving the environment. Maybe you want to invest in companies that clean up pollution or use renewable fuels like wind and solar. Or maybe even just invest in a company that is trying to reduce its environmental impact through robust recycling policies, and you're willing to reward them for their effort. There are many different forms of environmental investing you can evaluate. Next, let's cover social impact investing. For those, you'll be evaluating the social mission of respective companies. It doesn't necessarily have to be how the company makes money, but it can be how they manage themselves, both internally and externally. Do they have, say, an ethical supply chain sourcing or documented social policies around employee retention, development, pay, and diversity? Maybe they just have a great working environment with high employee satisfaction and a great customer service for you, and you love that. Those are all fine reasons to support a company through ESG investing. Another aspect of social impact investing is to focus on how they do make money and invest in those that have a positive social mission, like building affordable housing, or if they earn revenue through, say, consulting on improving racial equity. And last, but certainly not least, let's look at the G in ESG. That is governance. It's also known as corporate governance. It's called corporate governance because it focuses on the leadership or the board of directors for a company. Aspects that investors look at here is the diversity of the board from a gender and racial perspective, or what is the pay at the C-suite level versus that of the frontline workers. As a side note on this one, if you're interested in gender parity at companies, you'll want to see my prior video on the recent report from the Harvard Business Review and how we, as investors, can get better returns with less risk by looking at the gender makeup of companies' management teams. Now that we've covered what ESG investing is, let's talk about if we should even be doing it. I'm not talking about giving money to charity. That's a whole nother ballgame. I'm not even really going to talk about the moral compass side of it because that feels obvious. If everything were held constant and returns were all the same, of course we'd want to invest in and support companies we believe in. But money and returns are a primary goal of investing, so that begs the ultimate question: does ESG investing actually stack up with traditional investing principles? And the answer is yes. In 2019, Morgan Stanley put out a white paper analyzing 11,000 mutual funds over a 14-year time period. What they found was, and I quote, "no financial trade-off in the returns of sustainable funds compared to traditional funds. In fact, you can see the nearly identical returns comparing the two here on this chart. Okay, so with ESG investing, we get to follow our conscience and put money where our heart is. We get comparable returns to other funds, but what about the risk and volatility? Is that where the trade-off is? The answer is no. ESG investing actually provides better stability and less risk. In turbulent times like 08, 09, 2015, 2018, they performed better with less downside than traditional investments. Okay, so let's recap what we've covered so far. Environmental, social, and governance investing allows us as investors to 1. Elevate and promote companies that we truly believe in. 2. Generate comparable returns to the underlying index. And 3. Provide less risk and volatility to our portfolio. That's a triple play, a win-win-win. That's like killing 3 birds with 1 stone, or the best of all worlds. Okay, so you get the point. ESG investing is a powerful tool and it should be considered a part of anyone's portfolio. If you are convinced and you want to start looking into it, a great resource is Morningstar's Sustainability Rating. They evaluate 20,000 mutual funds and ETFs. Each is graded on a scale from 0 to 100, with 50 being the average. They also have a 7-page paper called the Morningstar Sustainability Rating that walks you through their methodology system. Maybe you want to evaluate individual stocks. I would try a Google search with the term Impact Report and the name of the company. Or you can review their latest 10K filed with the SEC. Here's a great example of Nike's 2020 Impact Report. These reports come out annually for many companies, and they cover the various ESG goals that the company is targeting. And of course, there's always the easy button ETF. There's an ETF for just about any investing strategy nowadays, and ESG is no different. So check out the JUST ETF from Goldman Sachs. It's had a strong run since its inception in 2018, generating nearly 16% return each year. So if you're the kind of investor that likes to walk their talk, you are now armed with ways that you can invest in stocks, mutual funds, or an easy peasy ETF. If you're already participating in ESG investing, I would love to hear from you in the comments below. Thank you for joining, and I will see you on the next one.